The idea for this video came from a recent case with a trader I know who is a good trader but ended up in a huge loss during the recent altcoin downturn because he took on big leverage. For some reason, he decided either not to set stop losses or to move them somewhere, even though he understands how to trade and how the market works. But certain emotions took over him after he saw that for the first time in several years, altcoins started to shoot up vertically, making a lot of money. And well, it seems he thought that this would just keep accelerating, shooting up vertically, and that money was just going to be handed out. Well, it doesn't really matter what he thought. The most important thing is that he opened a number of trades emotionally, which, after he analyzed them, clearly turned out to be unsystematic. It's unlikely he would want to repeat them with a clear, rational mind. And perhaps you catch some notes from my speech, from my story about myself. Maybe you've also blown your deposits trading on emotions, trading not according to a strategy, even though you have one. By the way, if you don't have a strategy, then this video won't help you at all. You need to develop a strategy first. A strategy. This video is more about the fact that even if you develop a strategy, it doesn't guarantee you'll make money, because you also need to manage to stick to that strategy. And I will tell you only few ways how to do this, which most likely will not help you in any way unless you lose some money and do not pass it through yourself. But still, maybe at least a couple of people will save their deposits, and then this video won't be in vain. Check the description, there will be a link to register on the Bybit exchange. This is the #1 exchange that I personally trade on, and it's the top one in terms of trading volume, liquidity, and it has the lowest fees. Just from this, you'll save around a few $100s every month. And why do I recommend registering specifically through my referral link in the description? With it, you'll get a cash bonus for registration ranging from $10,000 to $30,000 depending on the size of your deposit. Most of my subscribers get $100, but if you don't have any deposit at all, you'll at least get $10. If you're a big trader, with a good deposit, you can get up to $30,000. But for larger amounts, you'll need to reach a corresponding trading volume. On this page, click here and you can see what bonus you'll get for registering. The link is below. Enjoy watching. In moments when you feel some emotional shift, whether it's positive or negative, especially if it's positive, like when you're feeling euphoric or anticipating something and your pulse quickens and you're just filled with joy, smiling from ear to ear, that's actually bad too. It can lead to losses in trading. And if you catch yourself thinking that something has changed in your emotional state, you need to do this. You need to try to catch yourself in that thought. It means you shouldn't be getting into the market. But most likely, even if you catch yourself thinking that way, you'll convince yourself, oh, it's nothing, what emotions? No, everything's fine, everything's normal, the market is soaring, everything's good, I'm trading according to my own ideas, my own rules. But it's really important to recognize this self-deception when it happens. It's crucial to articulate every rule. So, I have all my rules written down in a spreadsheet with my trading journal where I record my trades. I have all my rules written down there. I open it up, look at it, and read it out loud before I open a trade, where I enter a trade and where I don't. And in these rules, I have clearly outlined even some moments where I don't trade at all. If a coin has shot up by over 50% in the last week, I don't open any trades. And it's not just that I don't buy long positions at the highs, but I also don't really get these vertical spikes. There has to be some kind of setup. It's very important. I have it written down, and I recommend that each of you write it down too. You shouldn't make any trades in the market at all just because there's been some movement in a certain direction. You didn't want to open a trade. You didn't have the idea that you were just sitting there waiting for, a level, thinking that if a breakout happens, then I'll open a trade. Well, you didn't have that. You might have gotten a notification, someone wrote to you, or someone called and said, you need to do this urgently, pay attention, look over here and there. Or just recently the dollar shot up above 100 and it was something like 115, right? This actually applies not just to the cryptocurrency market, but to any other market as well. You didn't want to buy dollars. You were just holding money in your deposit, but now you're feeling scared. Some emotions like fear of missing out or the fear of your currency losing value. And so guys really went and bought at 115, made some kind of mess. This applies to absolutely any market. And the universal rule is, if you didn't plan the trade, don't go in. If the news didn't contribute to that, I saw the news that Elon Musk is pumping Dogecoin and I rushed to buy it, but just based on that, no. You didn't plan to buy Dogecoin. You couldn't buy Dogecoin If you're making a trade, any deal just because someone told you to, or hinted at it, or something happened that made you go and do it, then you're going to lose money in the market. You'll never make a profit. You need to have a trading plan and you have to stick to it. So right now, for example, it's hard for a beginner to understand, someone who has probably never traded by a plan, but here I am right in front of you. I'm going to the 5-minute chart. I'm looking at what's happening here. I'm analyzing the market. In a nutshell, quick and to the point, this flash crash, they're buying up Bitcoin. There's a lot of volatility. There's some kind of pennant forming here. I've already looked at the market before this video. It looks bad negative, forming a double bottom, not a reversal. It might linger, but the downward path is likely, so no long entries. There's a level here and the price rose slightly, but I avoid vertical spikes. It might linger, but the downward path is likely, so no long entries. There's a level here and the price rose slightly, but I avoid vertical spikes. No vertical breakouts, that's my rule. If it's a level, I take it on a breakout, but only slowly. If it approaches vertically like this, that's not my trade. If it comes in vertically, it shouldn't break out vertically. It should come up slowly, with a pullback. And in that case, I would enter the trade. No vertical breakouts. So, I'm scrolling, and I have some idea that the market will bounce back. No vertical breakouts, that's also one of my rules. So, I'm scrolling through, and I have this idea that maybe the market will bounce back. Let's find a coin with the best setup for a bounce. And here it is, it's on your screens, something that looks like a bottom. By the way, not the best setup. Here too, it looks like a bottom. It's actually a better setup because there are clear, defined higher lows. This is in question. Sure, there was a peak moment here, but we were hanging around at the bottom for much longer, so that's how I mark it. Here there are higher lows. Well, there's some potential. So what's the idea? So I have an idea. If the market is reversing, the first thing I look for is that Bitcoin needs to break out of the pennant, the upside. So if a coin is flying on its own, it might shoot up for a while, but then Bitcoin just crashes like this afterward. Well, usually all the coins that shot up on their own tend to crash down along with Bitcoin. So if Bitcoin breaks out of the pennant up here, and at the same time this coin also breaks its level ideally with a retest, that's when I enter a long position. I figured out for myself, well, I'm just saying this as an example, I literally just looked at this for 3 minutes. Of course, I'm not going to open a real account right now, but at least I have some kind of idea as an example, right? The logic. So I have a plan, I'm waiting for an entry point. And once again, traders don't just jump into the market and look at where it's going, down or up. Oh, looks like it's going down, so let's open a short. No, shouldn't be guessing the price. There has to be some kind of plan, there has to be a strategy, right? And I have that plan. I stick to it, so I set some kind of alert, or I have 4 monitors plus each one is divided into frames. I put Bitcoin in one frame, I put this chart in another frame, and I keep an eye on them. I sit here, showing the computers, maybe looking at other trading ideas, checking out other coins. And if it comes here, yeah, I planned for this, I enter the trade. Well, I double check 15 times where the stop losses are and so on, whether my idea matches the market, maybe the market has changed, what the market is planning to do. I keep running these questions through my head and answering them. If everything looks good, I enter the trade. Do you understand the logic? Not because, oh dear, what do we have here? 2% dropped. Wow, what a bounce. I was just looking for the bottom somewhere and there it goes flying up. Yeah, it's about to break out. Let me jump in here. Or any other reason. You didn't have a plan, but you saw something. Something happened, a news release came out, or something else occurred, and you jump into a trade. That's it, you lost money. Well, maybe not right now, maybe you'll get lucky. So, theoretically, you could randomly click in the right direction, randomly hit the button, and randomly lock in either a profit or a loss, and do that 15 times. Well, there's definitely a chance you could end up with money, maybe even in the plus. But if you're trading not just without a plan, but based on some other desire or someone else's advice, you're going to lose money. You should only trade according to your plan. To modernize this plan, to make notes in it, well, not exactly a plan, yeah, more like a trading system. I've already talked about that. The plan. The trading day is built based on your trading system and the market. What is the market offering? What conditions? Maybe you won't have a plan at all for today because, well, the market conditions just aren't right. That means there shouldn't be any trades at all in a day. If there's no plan, there are no trades. All trades have to match A, the plan, and B, the market. No other way. It's such a drag trading. It feels so stuffy. This is for those who want to make money from trading. If you want to play around, In a casino, mess around with big leverage. Sure, you can do that, but it's clear you'll lose all your money. If you want to make money, follow me on my social media. Plus, there are links below to others, not just this YouTube channel. There's more content there. There's also a free trading course pinned in the Telegram channel. Subscribe to the Telegram channel, take the free course, and start making money. Good luck.